This week in crypto was nothing short of explosive. Bitcoin surged past $111,000 with analysts eyeing fresh all-time highs. Coinbase made history by joining the S&P 500, marking a major win for crypto legitimacy. Strive launched a bold bid to scoop up MtGox Bitcoin at a discount. XRP whales backed the launch of PayFi through Remittix, aiming to revolutionize cross-border payments. And in Dubai, the crypto elite partied hard with yachts, meme coins, and even Eric Trump in the spotlight. Let's dive into the biggest stories of the week.
The much-anticipated announcement from Pi Network has failed to meet expectations, triggering a sharp downturn in sentiment and price across its community of investors and traders. Once hailed as one of the most promising mobile-based cryptocurrency projects, Pi Network found itself under intense pressure this week after delivering a major update that many users described as vague, unimpressive, and lacking any significant roadmap clarity. Pi, which is still operating in its so-called enclosed mainnet phase, released details on its plans for transitioning to an open network. However, rather than confirming a definitive launch date or providing technical progress updates, the team shared what many have called overly cautious language, suggesting that the open mainnet could still be months, if not longer, away. The market reaction was swift. PI Coin, which already lacks traditional exchange listings and operates through peer-to-peer markets, saw a sharp decline in trading volume and value. The token, previously trading at speculative highs on over-the-counter platforms, experienced double-digit percentage losses within 24 hours of the announcement. Many early adopters, who spent years mining Pi through its mobile app, are now voicing frustration and concern over the project's prolonged development timeline. Despite years of marketing, a massive user base, and an active online community, critics argue that Pi Network has yet to deliver a functional, tradable cryptocurrency ecosystem. Adding to the uncertainty is the lack of transparency around the project's internal economics. Pi Network still does not operate on public blockchains like Ethereum or Bitcoin, and the codebase remains largely inaccessible for external review. For many analysts, this continues to raise red flags about the project's viability and long-term credibility. However, Pi Network's development team insists that they remain committed to delivering a fully operational platform. They argue that the extended testnet phase is necessary to ensure stability, regulatory compliance, and scalable infrastructure before a full public launch can occur. Still, for users who have been waiting since as early as 2019, patience is wearing thin. Many had hoped that this week's update would mark a clear turning point, a transition into a real, open-market cryptocurrency. Instead, what they received was another delay wrapped in technical language and vague promises. As of now, the project continues to rely on its loyal base to maintain momentum, but without clearer milestones or deliverables, skepticism is likely to grow. We'll continue to follow this story as it develops, especially if Pi Network offers further clarification or progress updates in the weeks ahead. In the fast-moving world of crypto, projects can surge or collapse in a matter of days. And right now, Pi Network appears to be dangerously close to losing the confidence of its community. Stay tuned for more updates as we track what could be a turning point, for better or worse, in the future of Pi Network. A major development is unfolding in the world of blockchain finance as several of the top XRP holders have officially joined forces with the new remittance-focused platform, Remittix. This move, paired with the upcoming launch of a bold new initiative called PayFi, could represent a major leap forward in how money moves globally. Remittix, which aims to streamline cross-border payments using XRP and other digital assets, announced that it has onboarded some of the largest individual and institutional XRP holders in the ecosystem. While the identities of these holders remain confidential, sources suggest they include early investors, tech insiders, and well-known participants in the Ripple community. So why does this matter? For years, One of XRP's biggest promises has been its ability to power fast, cheap, and borderless financial transactions. While Ripple has focused on institutional partnerships with banks and payment networks, Remittix and PayFi appear to be taking that vision even further by opening up a decentralized remittance network designed for individuals, businesses, and fintech operators alike. According to the company, PayFi will serve as the central payment engine for Remittix, connecting users around the world through a combination of on-chain liquidity, stablecoin gateways, and XRP-powered settlement layers. In short, it aims to do what traditional banks struggle with: move money fast across borders with minimal fees. What's especially interesting is that PayFi isn't just trying to replicate RippleNet. It is aiming to offer a decentralized alternative. While Ripple works closely with central banks and financial regulators, PayFi positions itself as a more open, crypto-native solution that doesn't rely on legacy systems. By attracting top XRP holders, Remittix is building a powerful foundation of support and liquidity. This could be key to its early success. With enough on-chain volume and trusted participants, the platform could emerge as a serious competitor in the $800+ billion global remittance market. The timing also couldn't be better. With crypto adoption on the rise globally and blockchain-based payments gaining traction in regions like Latin America, Southeast Asia, and Africa, there's a growing demand for infrastructure that's fast, secure, and inclusive. That said, success is far from guaranteed. Regulatory challenges remain, particularly in regions where crypto use is restricted or poorly defined. And the question of whether PayFi can scale while remaining decentralized will be one to watch closely. Still, the launch of Remittix and the momentum behind PayFi have XRP holders and crypto investors paying close attention. If the project delivers on its promises, it could transform the way people send and receive money, not just across countries, but across the globe. We'll be watching this space closely as PayFi approaches launch, and we'll bring you updates as Remittix moves closer to redefining the future of cross-border payments. Bitcoin tops 107K could hit record highs this summer, say analysts. Bitcoin continues to defy old market wisdom and push higher, now trading above this 107,000 and showing no signs of slowing down. The classic adage of sell in May and go away doesn't seem to apply this year. And according to analysts, we could be on the brink of new all-time highs this summer. Traditionally, May has been a month of consolidation or even retreat for Bitcoin, with many traders historically locking in profits ahead of the slower summer season. But 2025 is telling a different story. With strong institutional demand, favorable macroeconomic signals, and rising optimism around regulation, Bitcoin is once again rewriting the rules. According to analysts at several major firms, Bitcoin is likely to not only hold above the 100K psychological level, but could surge toward fresh records in the coming months. Market data shows increasing inflows into spot Bitcoin ETFs, a significant spike in on-chain activity, and a notable decline in exchange reserves, a sign that more investors are moving their assets into cold storage rather than preparing to sell. In simple terms, people are buying and holding. Part of this bullish sentiment is also being fueled by growing confidence in crypto legislation coming out of the U.S. Recent proposals in Congress have shown bipartisan support for establishing clearer rules for digital assets, which many believe will unlock even more institutional money. At the same time, global economic uncertainty continues to push investors toward alternative stores of value, and Bitcoin, often dubbed digital gold, is benefiting. With inflation fears still lingering and concerns over traditional banking stability resurfacing in parts of Europe, digital assets are increasingly seen as a hedge rather than a high-risk gamble. Technically, Bitcoin's chart is also flashing green. Multiple analysts point to strong support at $100,000 and potential upside targets near $115,000 to $120,000 if momentum continues. Some are even suggesting a move toward $150,000 by late summer, especially if ETF inflows remain consistent. Still, not everyone is convinced. Some caution that a pullback is overdue after such a rapid climb, and warn that regulatory hurdles or global financial shocks could stall Bitcoin's upward trend. But for now, the dominant narrative is one of strength, not weakness. In a year already marked by surprising resilience and significant milestones, Bitcoin's performance this May is flipping old market patterns upside down. Whether you're a trader, investor, or simply watching from the sidelines, this summer could be one for the history books. We'll continue monitoring Bitcoin's movement and bring you the latest updates as the crypto market enters what could be a defining season.
A bold move is unfolding in the crypto world, as digital asset investment firm Strive has announced its intention to acquire a portion of the long-lost Bitcoin tied to the now-defunct exchange, MtGox, and they want it at a discount. Strive, a relatively new but fast-growing player in the crypto investment space, is targeting claims from MtGox creditors, offering to buy them out before the official repayment process concludes. The company says it's offering liquidity to claim holders who've been waiting over a decade for resolution following one of the most infamous exchange collapses in crypto history. For those unfamiliar, MtGox was once the largest Bitcoin exchange in the world, handling over 70% of all BTC transactions before its dramatic collapse in 2014. The platform filed for bankruptcy after it was revealed that roughly 850,000 Bitcoins had been lost or stolen, a blow that shattered investor confidence at the time and became a defining moment in crypto history. Since then, creditors have been trapped in a complex and prolonged legal process, with repayment timelines repeatedly delayed. Although progress has been made, many claim holders remain uncertain about when they'll see their funds, or how much they'll ultimately recover. This is where Strive comes in. The firm is reportedly offering to purchase these claims at a discounted rate, giving creditors the option to receive immediate liquidity rather than wait potentially months, or longer, for full distribution. While the exact discount rate hasn't been made public, the strategy reflects a growing trend in distressed asset investing, where funds acquire uncertain claims in exchange for near-term payouts. For Strive, it's a calculated bet. If the final Bitcoin distributions from MtGox are valued higher than what they paid for the claims, they stand to profit significantly. And with Bitcoin trading well above $100,000 in today's market, that profit could be substantial. But the move isn't without risk. Legal complexities, fluctuating market conditions, and the unpredictable timeline of MtGox's rehabilitation process could all affect the ultimate value of these assets. There's also ethical debate. While some see this as a smart financial play, others view it as taking advantage of long-suffering investors desperate to cash out. Still, this development reflects how far the crypto space has matured. Institutional players are now actively engaging in complex debt and claims markets, the kind of financial engineering once limited to Wall Street and distressed corporate bonds. Whether Strive's gamble pays off or not, it highlights a new chapter in the MtGox saga, and reminds us that even a decade later, the collapse of one exchange continues to echo throughout the industry. We'll keep you updated as this story unfolds and as other firms potentially enter the race for MtGox's long-dormant Bitcoin.
In a major step forward for crypto asset accessibility, Volatility Shares has officially launched the first-ever U.S.-listed XRP futures ETF, giving investors new exposure to the world's fifth-largest cryptocurrency without having to directly own the token itself. The fund, trading under the ticker symbol XRPF, went live this week and marks a significant development not just for XRP holders, but for the broader crypto market. It is the latest in a growing trend of financial products designed to bridge traditional markets and the digital asset world. This move comes at a time when XRP has seen a resurgence in investor interest, thanks in part to Ripple's ongoing legal battles with the U.S. Securities and Exchange Commission, which appear to be winding down. While the regulatory status of XRP remains a topic of debate, this ETF provides a new way for traders and institutions to gain exposure, all while sidestepping the direct custody risks of holding crypto. So what exactly does an XRP futures ETF mean for the market? Unlike spot ETFs, which directly hold the underlying asset, a futures ETF tracks the price of XRP through standardized futures contracts traded on the Chicago Mercantile Exchange. This allows the fund to mimic the asset's price movements, giving investors a taste of XRP's market action without the regulatory hurdles involved in spot custody. Volatility Shares, the firm behind the product, is no stranger to pushing boundaries. They previously launched the first leveraged Bitcoin futures ETF in the US, and now they're expanding that model to altcoins, starting with XRP. According to the company, demand for diversified crypto exposure is growing fast, and XRP's high liquidity and consistent trading volume made it an ideal candidate for this type of fund. For investors, XRPF opens the door to XRP participation through traditional brokerage accounts and retirement portfolios, something that could be particularly appealing to those wary of crypto exchanges or security risks. It also signals that Wall Street's appetite for digital assets is not limited to just Bitcoin and Ethereum. That said, futures-based ETFs do carry certain complexities. They are subject to roll costs, contract expiration issues, and may not always track the spot price perfectly. Experts recommend that retail investors fully understand how these products work before diving in. Still, the bigger takeaway is clear. XRP is entering a new phase of institutional accessibility. As regulatory clarity improves and financial innovation continues, we may see a wave of similar products tied to other major altcoins in the near future. The XRPF launch comes at a time when crypto markets are showing renewed strength, and it could very well pave the way for expanded interest in XRP during this next phase of digital asset adoption. We'll be watching how the fund performs and how investors respond as this new chapter in crypto investment unfolds. Coinbase has just made history, officially joining the S&P 500, one of the most prestigious and closely followed stock market indices in the world. It's a massive leap forward not just for the company, but for the legitimacy of the entire crypto industry. The announcement, confirmed by S&P Dow Jones Indices, means that Coinbase's stock, trading under the ticker symbol COIN, is now part of the elite group of 500 companies representing the backbone of the American economy. Other members include household names like Apple, Microsoft, Amazon, and J.P. Morgan Chase. This move marks a defining moment for Coinbase. The company, which went public in 2021 during the peak of the last crypto bull run, has weathered significant ups and downs, including regulatory scrutiny, price crashes, and shifting public sentiment. But now, being added to the S&P 500 signals that Coinbase has reached a new level of stability, maturity, and financial importance. To qualify for inclusion, companies must meet strict criteria, including consistent profitability, a strong market capitalization, and a high degree of investor interest. For Coinbase to meet those standards, especially during a time of heightened government scrutiny of the crypto space, is seen as a major vote of confidence from traditional financial markets. Market analysts say the move could have ripple effects across the industry. Inclusion in the S&P 500 often leads to increased institutional investment, as many index funds and ETFs are now required to hold shares of Coinbase. This could drive up trading volume and stock demand, giving Coinbase more financial flexibility to grow and innovate. It also sends a strong signal to regulators, investors, and skeptics that crypto is here to stay. A decade ago, the idea of a crypto exchange joining the S&P 500 would have sounded absurd. Today, it's a reality. Coinbase CEO Brian Armstrong responded to the news by calling it a milestone achievement, not just for the company, but for the broader crypto movement. In his words, this is validation of a decade's work to bring crypto into the financial mainstream. The timing couldn't be more symbolic. As lawmakers continue debating how to regulate the crypto sector, and as Bitcoin pushes toward new highs, Coinbase's rise into the S&P 500 underscores how far the industry has come, from niche technology to institutional force. For now, investors are celebrating the news, and Coinbase's stock price has responded positively. But beyond the price action, this moment represents something much bigger: the integration of crypto into the core of global finance. We'll continue watching how this impacts the broader market and what it means for the future of crypto regulation, adoption, and innovation. Stay tuned. The next chapter of the digital economy is being written right now. Bitcoin is once again approaching record territory. As of this morning, the cryptocurrency was trading just above $106,000, edging closer to its all-time high of $108,786 set earlier this year. Several factors are fueling this surge. U.S. spot Bitcoin ETFs have attracted over $2.8 billion in net inflows during the first half of May, pushing total assets beyond $122 billion. Additionally, J.P. Morgan has revised its year-end Bitcoin price target to $150,000, citing increased institutional adoption and favorable market conditions. Legislative developments. On the regulatory front, the U.S. Senate is set to debate the Genius Act, a landmark bill aimed at establishing a comprehensive framework for stablecoins. The legislation mandates that stablecoin issuers maintain reserves of liquid, safe assets and comply with anti-money laundering and counterterrorism rules. While the bill has bipartisan support, its progress has been complicated by concerns over potential conflicts of interest related to President Trump's family's involvement in cryptocurrency ventures, Strategic Bitcoin Reserve. In March, President Trump signed an executive order establishing a Strategic Bitcoin Reserve, utilizing forfeited Bitcoin assets held by the Treasury. The reserve aims to position the U.S. as a leader in the digital asset space and includes other cryptocurrencies like Ethereum, Solana, and Ripple. As Bitcoin hovers near its all-time high and significant legislative actions loom, the coming weeks could be pivotal for the cryptocurrency market. We'll continue to monitor these developments and provide updates as they unfold.